What is Forex? Forex is a marketplace where various national currencies are traded. Forex market is the largest, most liquid market in the world, with trillions of dollars changing hands every single day. There is no centralized location of the Forex market, but rather the Forex market is an electronic network of banks, brokers, institutions, and individual traders. The Forex market is open 24 hours a day, 5 days a week, except for holidays. You can still trade currencies on a holiday if at least the country global market is open for business. So how to start trading Forex online? Retail traders can open a Forex account and can then buy and sell currencies. So how can a retail trader open a Forex account? By signing up with a broker. Retail traders can open their Forex accounts with as low as $200 of the minimum investment, and then they can buy and sell currencies. They can make profit or loss that results from the difference in price the currency was sold and bought at. So what are Forex pairs and codes? When trading currencies, pairs are listed such as US dollar CAD, Euro dollar, dollar yen. What does Euro dollar represent? It represents Euro versus the US dollars. What does US dollar yen represent? Of course, US dollar versus Japanese yen. There will be a price associated with each pair, such as 1.39. If this price was associated with the US dollar CAD pair, it means that it cost 1.39 Canadian dollar to buy 1 US dollar. Now let's suppose the price decreased to 1.3336, then now it costs 1.3336 Canadian dollar to buy 1 US dollar. What does it tell us? It tells us that the US dollar has increased in value, and of course Canadian dollar decreased because now it costs more Canadian dollars to buy 1 US dollar. Forex lots. In the Forex market, currencies are traded in lots. These are termed as the micro, mini, and standard lots. A micro lot is 1,000 worth of a given currency, a mini lot is 10,000, and a standard dollar is 100,000 worth of a given currency. In online trading, you can trade as many lots as you want. Starting from micro lots, you can go up to even 100 standard lots. Forex market is the largest market in the world, with trillions of dollars traded every single day. The largest foreign exchange markets are located in major global financial centers like in London, New York, Singapore, Tokyo, Frankfurt, Hong Kong, and Sydney. A practical example of what Forex is all about. Forex is something that we see in our real life. So let's just consider a scenario. You are a Canadian and are looking to spend a holiday in United States. So when you move to United States for the holiday, you cannot use the Canadian dollar there. So you need to go to an exchange to exchange your Canadian dollar. So at the time of the exchange, 1 US dollar was equal to 1.39 Canadian dollars. So you have $693 to exchange. Now in order to get exchange in US dollars, your $693 will be exchanged to 500 US dollars. Now if you hold into that money and price of the United States dollars increases more as compared to the Canadian dollar, then you will be profiting in the United States dollar. What do you have to do? Just simply holding the currency. So just by holding a currency, with its movement up or down, you make profit or loss. So in this case, if the price of the Canadian dollar decreases, you will make money in the United States dollar. But if the price of the Canadian dollar increases versus the US dollar, now your money is going to be depreciated. Very simple. Let's just go into a little bit history of the markets. So back then, foreign exchange trading was largely limited to government, large companies, and hedge funds. But in today's world, trading currency is as easy as a click of a mouse. Accessibility is not even an issue. Anyone can access it. Many investment firms and retail forex brokers offer the chance for individuals to open accounts and trade currencies. So we will go back to the example we discussed earlier. So you went to a holiday on United States of America. You exchanged the currency. So you did a physical exchange. You physically converted your Canadian dollar to US dollar cash. and maybe you get charged a commission for that, so you can spend the money while you're traveling. But trading online is different. Traders usually take a position in a specific currency with the hope that there will be some movement in the market from which they will be profiting. A currency is always traded relative to another currency. If you sell a currency, you are buying another. And if you buy a currency, you are selling another. So in the online trading, a profit is made on the difference between your transaction prices. What are the fees and commissions that a trader has to pay? So in the real world, when you travel to another country, you have to pay the commission for that exchange price. In Forex, it's similar, but you have to pay these fees in the form of spread or commission to the brokers. Most Forex brokers make money by marking the spread on currency pairs. Some other brokers make money by charging a commission. Some brokers even uses both of these approaches. The Forex market allows for leverage up to 50 M1 in the US and even higher in some parts of the world. If you are living in Australia, there are some brokers that offer you leverage up to 500. So what does this leverage of 50 to 1 means? This means that a trader can open an account for $1,000 and buy or sell as much as $50,000 in currency. Leverage is a double-edged sword. It can either magnify your profits or losses. Well, hopefully this video helped you a little bit about what Forex is all about. So don't forget to subscribe this channel